Welcome to Premium Cashflow Real Estate Investing Podcast with Sakar Kauli. During this program, you will hear guest experts sharing their experiences, best practices, and market insights. We discuss investing in multifamily apartment complexes and how a busy professional can passively invest hassle-free in various opportunities. Your host, Sakar Kauli, owns millions of dollars of assets and has done thousands of value-add projects over 20 years now. So listen in for insights. Here's your host, Sakar Kauli.
So welcome to another edition of Premium Cashflow Podcast. Today, I have the pleasure of having Mr. James Kandasamy, and James is with Achieve Investment Group. And James is owning well over 1,500 units now spread across various apartment complexes. And James, along with his wife, has achieved an incredible amount of portfolio in a very short time. So without further ado, James, I want to welcome you to Premium Cashflow Podcast. I think our audience are going to enjoy your experience and your advice that you have to share as it relates to apartment complex and general real estate investing. So I want to welcome you to the show, James. And if you can share, James, in terms of where you started and how you went about your real estate journey, that would be so great to hear.
Sure. I mean, James Kandasamy, happy to be here, Sakar. Thanks for having me here. Sure. We started in single family houses back in 2013, and then 2015 when we moved to multifamily, right? So, single family is where we started. We started with 13 single family, where 11 of it was rental and 2 of it were flip. And after hitting a bottleneck in single family, we moved on to multifamily. Mm-hmm. So we have been doing multifamily since 2015. Right now we have like almost 1,400 units all in San Antonio and Austin. Mm-hmm. My wife and I runs the show. She runs the operation and rehab, and I do the acquisition and investor relationship. So, right. Mm-hmm. So yeah, she's very strong in her area. I'm really good in my area too. So that's how I got started.
Sure. I think your operation, James, is more or less in terms of structure is similar to mine, where I also focus on acquisitions in our side, and my wife primarily oversees the renovations and property management aspect of things.
That's so good.
There's some similarity.
Good. Now you know all the problems we have, right?
Yeah,
in the marriage.
Both can relate.
What are the things we talk when we are on the bed?
I know. So, James, how was your first deal? What made you shift into, let's say, apartment complex investing, and what was sort of that tipping point that you thought that, hey, single family model is probably not going to work? What made you shift towards multifamily?
Well, I mean, single family worked very well, right? I mean, you can find a lot of deals, quickly, because it's smaller deals, right? I mean, 200, 300,000 or 100,000, you can buy a house and you're on your own, right? You can control everything. The cash flow is in fact, if you look at cash flow, it can be much better than multifamily. However, I was doing a lot of analysis on why people say multifamily is better, right? I can never find a reason for 1 week, because why is that? Why is multifamily is better, right? Yeah, I understand the scale, I understand the business aspect of it, but we can work hard and make single family, we can make like 20-30% easily on single family, and multifamily people are talking about 8 to 9%, and why is that, right? But so after 1 week, the aha moment came in on the force appreciation play of the multifamily, where you can refi and pull out money, right? So that is something you can't get in a single family. I mean, after then I realized, oh my God, that's the whole thing, right? Because you can force appreciate, pull out your money. You can still do it in single family. In fact, my single family portfolio, I almost refi like 3 or 4 times, bought it at 45,000 and rehab it for 10, 15,000, become like 75,000. We rehab it once and go to 100,000. We rehab it twice. And And then we go to 120, 30,000, we start rehabbing, and now we have started selling our single family home. You can do that too in single family, but the amount of work, because you're playing on the smaller scale too, right? You're playing on onesie, twosie. So the amount of effort that you put in is a lot more in the single family, right? But multifamily, you're running it like a business, right? If you're really good at running people, running projects, turning around things, if you have passion for it, you're doing it on a much larger scale, and you make a lot more money within the short time frame. So end of the day, investment is about time value of money. You can make $10 million from now until 70 years old. At 70 years old, you probably have $10 million, or you can make $10 million in probably 4 to 5 years, right, where you can enjoy it right now, right? So it's all about IRR, where's the time value of money. So multifamily is where you can accumulate growth and wealth very quickly within a shorter time frame.
Very well said. Very well said there. And James, how was your first deal like? How many units, and how you kind of sourced that deal? How did that come about?
So first deal was 45 units. As I said, since 2010 until now, everybody says every deal is expensive, right? I mean, the same thing in 2010 too. Deals were expensive because they had other problems, right? So
it's all relative.
It's always relative, right? All the time, everything is expensive, but the time to buy deals in real estate is always now, right? It's yesterday, right? So
true.
So we bought 45 units at that time. I was looking for deals. I was doing single family, right? And it's hard to get into multifamily, especially if you're a newbie, because you are a different league. Right. So I started talking to brokers and talking to people, trying to get deals. And this was 2014. And it's just so hard because nobody will listen to you. I think even now it's the same thing, right? Same thing even in 2013. I'm sure it's the same thing in 2010. It's hard to get started because it's a different league, and brokers really doesn't want to talk to you and risk their commission with a newbie, right? So what we did is we started going direct to sellers. Hey, we do that in single family, right? That's how we bought out of 11, we bought 6, free cash out of pocket.
Oh, really?
Wow. Almost zero cash out of pocket. So yeah, we had 11 houses. Average cash out of pocket was $6,000 per door. And this was in San Antonio. So it's not like a distress market like Detroit, or where nobody want to go and invest at that time.
Sure.
Now probably things have changed, but it's a hot market, right? So we say, hey, let's do that in multifamily, right? There must be one guy who want to sell direct to us, right? So we use something called text blasting, and we're able to find someone who said, hey, why we're thinking of selling this and all that. And you'll be surprised. I mean, these are the same tactics that brokers use, right? So brokers, when they get started, they also have to establish a relationship, right? No sellers just want to give their multi-million-dollar deals to any brokers, right? So it takes time for them to establish a relationship. All the top brokers also, all of them started this way, right? They started establishing relationship. They started, building their credibility with some sellers, and that changed their whole paradigm, right? So buying the deal directly from seller made a lot of difference, right? So we bought it at, I think market was selling at 55 a door. We bought it 35 a door. Even at 35 a door, I could not make it work because I didn't know how to underwrite deals. So I started learning how to underwrite deals at that time.
That's very important.
Yeah, because as I said, newbies is multi-level problem, right? First is you don't have credibility. Second is you do not know how to underwrite deals.
Correct.
And that's where we got started. We were able to find a deal which makes sense, and it was a home run from then.
Nice. And I think once you get the momentum going behind you, I think broker starts approaching you, and the deals suddenly start to show up. I mean,
correct.
What they call the pocket deals, right?
Yeah, correct. Yeah, I mean, after we do 2 deals where we bought direct from sellers, and I getting calls from broker and say, who are you buying these deals? We do not know you.
I know.
Because they are
really local.
They think they control the market, but there's one guy going behind their back and buying the deals directly from sellers. And they were like, oh my God, we better get to know this guy, right? Because once they know you're a player in the market, they want to work with players because, obviously the players knows the sub-market pretty well. At the same time, one day we might sell our deals through them, right? So because you always buy wholesale and try to sell retail, right? So
I know. It's very interesting you say that, James, because you start with a sub market and you kind of focus on certain parts. Once you come to those certain parts, you start to know the entire neighborhoods, and you
correct.
come to know the streets. And next thing you know is that, oh, you don't even need to go there. You just know the area. You just tell
Correct.
me the block, tell me what complex or what house it is, and boom. If
Yeah.
he strikes, you pretty much are aware of it, and you kind of know all the homework is already there. So
Yeah, absolutely. I think local players have a lot of advantage. I mean, even nowadays, whenever a broker call me, and I can tell you, hey, there's something wrong with that deal. Let me find out. And usually, that kind of deals, they look for out of state players, or out of city players, because a lot
sure.
of times they may not know the details. But yeah, if you're local, it absolutely you have advantage to it.
Got you. Nice, nice. And also, James, like speaking about deal analysis and
Mhm.
things like that, like how do you go about, let's say if a offering memorandum comes across your desk, how do you go about saying, okay, this OM, like this deal, okay, like what like sort of the first parameters you use for either weeding out, or hey, this deems second look, can we thoroughly look at it? Can you maybe describe how your process is, like how you go about those things?
Oh, so any OM that I get fails the test of sniff test.
Okay.
So
Ooh,
deals that I
sniff test.
buy,
Interesting.
I don't look at OM at all. And I see just okay, thank you. And I just whenever I get an OM on the mail, I click the box behind the mail and I put read. So I don't even look at OMs that's being sent
I
by.
know. I think prettier the OM, I think the scarier it is, right?
Yeah. I mean, if the broker come to a stage where they're sending OMs, that means all the local players already saw it, and all the good buyers, all the credible
Passed
buyers
on
already
it.
saw
Yeah.
it and all that. So I don't really look at OMs being sent, because what's the point of buying deals on the market, right? I mean, you will be the highest bidder,
Sure. Mm-hmm.
and you probably the the guy who paid the most for it,
Paid the
right?
most.
So,
Correct. Correct.
yeah, the way deals work nowadays, good deals are
Mm-hmm.
bought by local players, right? Or
Mm-hmm.
players who are already in the market, they know the sub-market. So the way, if you understand the world of brokers nowadays, we are at the peak of the market, right? So good
Correct.
deals are always being shopped with the most credible buyers who they have done deals with. So they get the first look,
Sure.
right?
Mhm.
So no deals are off market unless you're buying direct from sellers,
Correct. Correct.
right?
Yeah.
If you're
This
buying
is
from broker, it's always on market deal, because they have to do their fiduciary responsibility to go on market and do the best for the sellers,
correct.
right?
Correct.
Unless you have a deal opposite this deal, then they may come back to you and say that, hey, I have a deal in front of you, you're the best guy to buy it. So that could be a real off-market deal, or a deal which fall out of contract, or there's something that only you can fix the problem, right?
Sure.
Or you are willing to take the chance and fix the problem. There are the three correct criteria of off-market deals. You buy direct from seller, deals that fall off contract, and you have a special skills that you can take over the deal, or you have a deal nearby and they come to you directly. There are three real off market deals. All other deals are on market, no matter what the brokers tell you,
Very
right?
true. There's a price for every deal, and at some price, it will always sell, right?
Yeah, correct. They usually look for that suckers who are from out of state, out of city, who's willing to pay that much money, right?
True, true. Sometimes,
um,
like when we also look at deals,
mhm,
James, we are like trying to see like if it is closer to 100 based on our capacity. I know you buy much larger deals now,
mhm.
but typically where, our group looks at is that, hey, has the ownership owned for at least like 5 years, 7 years, so
Correct.
that, there's
Mhm,
some type of, loan assumptions we could do sometimes, or
mhm,
they would have some significant equity behind their back that, hey, if we make an aggressive offer, we
mhm,
have some room to play with. Or
mhm,
we tend to pass on deals, like let's say if it's more than 50% value added already, I think
mhm.
there's not much for the next operator left. And of course,
Correct.
as you said very correctly, that there is, the market factor, that the market is so hot that you got to be always cognizant of, how
Mhm.
real the value add strategy is going to be. So we
Correct.
tend
Correct.
to, look at some of those as well. And speaking
Mhm,
of that value add, James, I
mhm,
know, since you do these value add
mhm.
deals, right? So how are you doing? Like, how are you positioning your dollars? Like, how much are you spending? What type of improvements you are doing, interior, exterior? Can you maybe describe
Good,
some
good.
of
That's a
these
really good
aspects?
question. So basically, we focus a lot on the interiors, but the exterior also, of course, we do it, right? But um, so yeah, we do exterior as well, but a lot of focus on the interior. But you'll be surprised to see how much value add just from not doing anything. So
Mm-hmm.
what do I mean by that, right? So just by installing good management, you
Sure.
can get a lot of value add just by good management. You don't have to do anything to the property.
Mm-hmm.
Because a lot of property management company are just so mismanaged. The tenant knows how bad they have been living in different places. So
Mm-hmm.
sometimes they really appreciate good management, right?
Mm-hmm.
When you follow
Give
up
us
on
an
work orders.
example. Like, if you can maybe give an example, what exactly do you
So
mean?
just like following up on work orders, right? And being
Mm-hmm.
nice to tenants, listening to them, following up on the
Mm-hmm.
work orders. A lot of tenants at class B and C really appreciate that. And they don't
Mm-hmm.
mind paying $30, $40 more just because you're nice, right? So at the end of the
Sure.
day, you have to
Sure.
understand it's not about rent price that people are looking for. People are looking for nice house to live. They
Sure.
want
Sure.
them to be heard. So right now our strategy has been like, we try to turn around properties very quickly. But at the same time, we try to instill good management first,
Mm-hmm.
even
Mm-hmm.
before starting to rehab. Because by
Right.
just good management, people start to lease with you. People like to renew their leases and all that. Then we go to the next level where we start, doing the exterior, doing the interiors and all that. But what I've realized is even with good management, there's tons of value add that you can just do for free, right?
Sure.
But of
Mm-hmm.
course, the trick is, we have our own property management. We tightly control our property management company.
Mm-hmm. Mm-hmm.
I look at my P&L and performance every day, right? And my wife is very strong in property management, so we do a lot of things on our own, and it's hard for an operator to give it to third party and expect the same, because it's
Sure.
not their baby and they're going to take forever to do it. But so that's the challenges that you know in good management is comes in, right? So sometimes, a lot of times, um as I said, it's not only increasing rents, reducing
Mm-hmm.
expense. First level I always see is,
Mm-hmm.
as I'm realizing through my experience as I do my deals, just by good management,
Mm-hmm.
the tenants appreciate it so much, and they don't mind paying $20-$30 more just for good management.
Right. Right.
That's first thing we do it, and after that we look for interiors, and we also do exteriors. But interiors is where we focus the most.
Sure. What kind of dollars are you spending on the interiors on an
Interiors
average?
probably 3,500. What we do,
Mm-hmm.
and we usually like to do flooring. We like to do new two-tone paints, new fixtures,
Mm-hmm.
new toiletries, new toilet pictures.
Mm-hmm.
So these are things we do. I mean, we used to do crown molding, stainless steel, and all that, but we realized you don't really have to do that much, right?
Yeah,
To
it's
turn
based
around.
on what the demographics around the neighborhood is and
Yeah,
what.
correct. But most of the tenant demographics nowadays, they are okay with black appliances itself, good flooring. And as I say, the most important thing I realize is not all this money that we are putting in. Of course, it attracts people to come and live in a nice place and nice units and all that. But lot of things I see is just good management
I
makes
know.
a huge difference.
I think what you said earlier, James, about having a listening ear and having a bit of showing empathy basically
Yeah.
towards a tenant base, and
Mhm.
I think I refer to my tenants as being resident tenants. Basically, I
Mhm.
always say that, hey, you're the resident of the unit, and I
Correct.
always treat them with utmost respect. And
Mhm.
like, we barely have vacancies in our portfolio in general. Like, every
Correct.
now and
Correct.
then, things do happen for a
Mhm.
certain reason. People are moving out.
Yeah.
And speaking about your deep value add plays that you do, like,
Mhm.
have you seen, like, when you acquire these properties, James, like, have you seen that, hey, due to like the different repositioning you're doing and things like that, or let's say if
Mhm.
the tenant base is different than what
Mhm.
your strategy is, have you
Okay.
seen any like tenants who leave and you have sort of a drop in occupancy in your sort of complexes as you are kind of trying to reposition the entire asset class there?
Oh yeah, absolutely. So always deep value add, the tenant occupancy will drop from 90 something percent at sale of point of sale, right? So to
Hmm.
almost 75%, 77%, because we are
Wow.
new sheriff in town,
Hmm.
and we want to do quick turnaround, and people start leaving because now they say, oh, we have been living like this for 10 years. Now this guy doesn't understand what we are going through, right? So,
Right.
and the property is also distressed, so they don't really see immediately,
Mhm.
see a big mismatch of expectation from the new owners
Mhm.
or the new management company compared to the performance of
Mhm.
the property, right? So, but we are able to recover very quickly because we do a good job in rehab.
Mhm.
So within 6 months, we go back to 90%, right? So, but by that time, you will have a much better tenant base. You have a much better staffing, and you have much better units that has been rehabbed and the exterior has been rehabbed. So people see that. But so our occupancy always drops because we do value add. Even on a stabilized deal,
Mhm.
in San Antonio, we still see value drop because people like to skip when they see new management. They think that they can escape not paying rents in Class B.
Interesting. So you're
Yeah.
saying, James, if I heard you correctly, you're buying properties that are more or less stabilized, but still maybe like Class B, trending towards Class C, things like that.
Mm-hmm.
And you do your deep value add plays. And during that time frame, you see that occupancy dip because it's just the state of affairs in that apartment complex, and maybe more so because I think you're going to direct owners, so that whole buildings or that apartment complex in some state of deferred maintenance, or needing a lot of TLC all around the units. Is that kind of what describes in general, like you're going direct to the sellers for the most part? So in that,
Yeah, but it's still, I mean, the sellers use third-party property management. It's just the different standards of property management, right? I
sure.
mean, if you look at asset classes, multifamily, yeah, I mean, it has been making money for the past 10 years, but it's also one of the hardest asset class to manage,
Absolutely.
right? So property management is where you make the money, right?
Sure.
Especially if you install a good one. So even in deep value add, it goes from 90 to maybe 75, 77. But even on
Oof.
a good deal where we think it was stabilized, even a B class, we think it's 95% good tenant base. Once we take over, it usually drops to like 90 to 85% because we are coming in with different standards, right?
Sure.
We
Absolutely.
try to put in new criteria for tenant base, and it's just how it is, how I've seen in
That's
the
just how
what's
business
happening.
works.
Yeah,
You
yeah.
have
I'm
your
not sure
new
whether other
rules.
markets is different, but I'm not sure how occupancy doesn't drop once ownership change. Maybe I don't know. Maybe there's some skill that I don't have, but I always see tenants leaving after we take over, and we are just ready because now all the bad guys leave. Now we have
No,
this
you
house
just
is okay
expect. You
for us.
just expect that surprise, and
Correct. I just
make
see
your
how bad
investors
it drops.
aware.
I just wait and see how bad it drops. But on a stabilized deal, we see it drops like 85 to 85% to 83%. But on a deep value add, it goes to like 75, 77,
Right.
just because it
And
has been distressed.
speaking of acquisitions now,
Mhm,
James,
mhm,
like, so when you're looking at the like, let's say OM, how
mhm.
are you analyzing? Do you pay attention to what the pro forma is calling for, or are you mostly basing your sort of your acquisitions most on what the current state of affairs is, or what the T12 has called for? Is that
No,
kind
I
of
don't look at pro forma at all. We have our own pro
okay?
forma that we put in because we know the expenses that we gonna use to run, right? I really don't look at OM. In fact, one of the deal I bought recently, until we close on the day of closing, I say, "Did you ever had OM for this deal?" Then the then the broker say, "Yeah, we had OM." Okay, can you send that to me? So
Oh my God.
yeah, because a lot of times we will know whether a deal is good deal or not just by the tone of voice from the broker.
Oh, I see.
Right. So if it's a good deal, they're talking to an experienced buyer, right? So they don't have to sell a lot, right?
Sure,
If it's not a good deal, they have to tell you a lot of stories about the deal, right?
sure.
So within few seconds, I would know whether a deal makes sense for me to analyze it or not, right? So, but I don't really look at pro forma that the brokers send because they are brokers. They're supposed to market it as
Sure.
a as a palace, right? So
Right.
I just look at what is the story? They said, okay, value add, how much they have done, how many years is the ownership has been there. I don't buy deals which people have owned like 2 years, 3 years, because we are
Oh,
basically
sure. Yeah.
keeping the deal and there's not much of equity in there, right?
Right. Right.
Unless you see something that you can come in and change completely. But it's very rare that I think only one deal which I bought was owned by 2 years. All other deals is owned like more like 10 years, 15. Because there's a lot of equity, you can buy
Right.
at a good price, and usually it's in a more distress where you can go and not say distress, it's just mismanaged or deferred maintenance, right? Where you can go and improve it.
Interesting.
Yeah, but we don't look at the pro forma from the brokers.
I see. So, like, for example, this whole concept of like, hey, I have to buy the deal at a certain cap rate and things like that. Do you attribute any attention to these sort of going in cap rates or anything like that, or do you
So unless you're buying deals for cash flow and don't expect any value to add, you can look at cap rate, entry cap rate, because
Sure.
that's what the big institutional guys do to park their money. It's called wealth preservation.
Sure.
And you can do it in class A, in a top market in downtown, new building. You can look at entry cap rate, because a lot of insurance company, a lot of REITs and all that, they just want to preserve the money, right? But we are not in preserving money. We are in the business of making money, right? So we want to make money for our investors.
Right.
So I don't look at entry cap rate at all because
Right.
I do a lot of value add. So like the deal recently I bought at a 3.7 cap rate. Right? It's just crazy,
wow.
right? I mean, market is at 5.5, and why is this crazy guy buying at 3.7?
Can you describe, James, like what that deal looks like? Like how many units? Because I'm interested, because buying at such a low cap rate, you must have seen some upside into it, or maybe a huge upside to it to justify,
Yeah,
that
yeah,
price.
correct. That's true. So you have to look at the spread from where you're buying to where you're going to take it, right?
Sure.
So the 3.7 cap rate that we bought, the insurance was like huge. It's like double the property taxes. And nobody can explain why, right? But so we walked around and we see there's nothing wrong with this property. Why is the insurance so high?
How many units was that, by the way?
It was 240 units.
240 units. And
yeah, we just closed like 2 weeks ago, right? So they were marketing 3.7, and I was telling broker, hey, why are you showing me 3.7 cap rate? But when I look at the financials, I say, there's something completely wrong, right? So that's why I say that one of the biggest skills that any underwriters or any operators need to have is, looking at financial and catching that, right? Because
sure,
that tells the whole story. And I say this is something wrong with the financials, and they said, and everybody's questioning why the insurance is so high. Insurance was like 400,000 for 240 units. It's supposed to be like 70,000. Instead of 70,000, it's 400,000, and they left it there. And they put it, of course, in the pro forma they took it out. But we usually don't buy on pro forma, right? We look at actual, and nobody can explain. And we say, they said the one building had a fire. I said, even a building with fire shouldn't be 400,000, right? So I talked to my insurance agent. He said, no,
unless there is like a flood insurance or like a flood zone.
Yeah, we were like trying to find out why is it 400,000. Even the seller doesn't know. Seller said, yeah, I didn't build the burnt unit, and they charged me so high. And so we just went ahead and with the due diligence, we said something wrong. So we are going to discard that 400,000 and just put our numbers of I think 60,000, 65,000 of insurance, because that's what we
Wow. So that itself can add like 300 and like 340,000 to your bottom line. That's unbelievable.
So we just went ahead and bought. So 3.7. I mean, we were doing due diligence, and we were doing, and we cannot find anything wrong with that property. Yeah, they are here and there. They say there's rodent issue. The rodent might bite the wires, cause fire. So many things.
Oh wow.
We were like really finding out why is the insurance so high. So
what year was this built in?
It's 1980s.
Oh wow. Okay.
It's a new property. It's a very nice property, right?
True class B.
Yeah. It's a class B property in a nice location. The seller owned it for 24 years. One owner.
Let's say original owner, more or less.
Original owner, yeah. They sent me a survey in a big white paper. It's not even in electronic copies, and
Wow.
It was crazy complex transaction.
So you saw upside in, like, let's say, reducing these type of expenses. Did they
Yeah.
had any other issues in terms of like high contract services or some
No,
other?
not really. That was the biggest one, right? I mean, their rent was low, right? Because same guy
Okay.
owned it for 24 years. They never
Sure.
put money into the deal and all that.
Mhm.
But amazingly, even my investors, when I present to them, they say, James, how are you going to solve this insurance problem? I say, well, I do not know what's the problem. There's no real problem, right? So I have to go with my gut feeling, right? So it's very interesting because halfway through, we were like, then I called the insurance people and they said, no, we have a new quote for 85,000. Okay. So 400,000 to 85,000. So the insurance, the current seller's insurance, I call them directly. I say, I told them, hey, I want to look at these and maybe use you guys as an insurance person. So they were excited now. Right? Because now they said, oh, the business is going to continue with them, right? So I say, is there anything wrong with that property? They said, no, nothing wrong. So why is it 400,000? They say they're not sure. So they used to charge. So I mean, fast forward as we go along, the banks start asking, why is it 400? The appraisers start asking, why is it 400,000? And we went back to the seller and really asked him, why is this 400,000? The seller said, no, there's nothing wrong. The same thing. But then because the bank start asking the appraisal, so now the sellers start looking at the P&L and say, oh, it's an accounting error.
Oh my God. How convenient for you.
How convenient. Yeah. He said, oh, actually, it's actually owner draw. Owner were drawing money from the property for own use. And they found out that it was actually an accounting error. The draw that they were making, like 100, 200,000 on a monthly basis, were actually charged to insurance.
Oh, wow.
So can you see the opportunity that you
Oh
have
my
on
God.
that
Yeah.
management? Even the property management doesn't know.
Wow.
Right. So
yeah, they probably ignore that because they're saying, hey, the owner is paying it, and they probably just completely discarded, hey, we have nothing to do with the insurance.
they don't really care. I mean,
Yeah,
24
exactly.
years ownership, who cares, right? So
Yeah, exactly.
and the owner doesn't care because she's just getting money. She just do not know where it's got charged, right? And the broker also didn't really see, right? So they
an
could not.
Apartment complex being owned for 24 years. It does not get any better. Oh my goodness.
Well, this is the first podcast I'm talking about this particular story because we just closed like 2 weeks ago. But
wow.
But it's going to be a really good value add because it's in a good
Nice.
location and it's 24
What
years.
sort of rent bumps you're expecting, by the way, James, on this?
At least $100 per door. I think we can get more, but I do not want to overpromise. But it's just.
What's the market like? Is it demographic wise? Is it like university close by, or is it close to
shopping? It's on the south side of San Antonio. Is a gentrifying area. Not university, but it's close to like some manufacturing plant. Like Toyota is nearby. We have a Texas. We have a Texas edition Toyota trucks being produced there in San Antonio. So it's close by to that. We have another property nearby, so we know the market pretty well.
Very good. Yeah.
Yeah. So there are the things that
that helps.
If you look at cap rate, you're gonna pass it, right?
Oh, absolutely. 3.7, you're not touching it unless you know that
even
market very well.
So the market was 5.5. So after you take out the insurance,
that's like where I was going with. Correct.
Yeah. After you take out the insurance, you assume you take out the insurance cost. So you say it's completely wrong. You go back to market rate 5.8, right? So I'm still buying it at market.
Yep.
Right.
Absolutely.
Still buying it at market, but the thing is, the upside of the spread from after you buy it. To the point where you're gonna stabilize your pro forma and the next 2 years is basically 8%. So you're taking it from 5.8 to 8%. So you can see the spread of 2.5%.
Wow.
That is the value add that you're doing.
Right. Absolutely.
Right. So I look for that. I look for the spread, not for day one cap rate. I mean, that kind of deals no more existing now where you can
I know. And I think you definitely want to find such anomaly where I think, hey, the expenses could be high or something is off. And
correct.
That does come by experience for sure. I mean, and typically, speaking of that, James, under your operation, that the other apartment complexes you have and stuff, what type of, like, are you doing rubs in them? What type of expense ratios you are running those properties at?
We are running at 48 to 52%.
Mhm.
maximum. I would say most of my properties are 48 to 50%
I see.
expense ratio.
And utilities, as far as water, sewer, and all that, is that
Yeah.
resident paid, or that's
Yeah,
all?
it's all resident paid. We don't have any all bills paid properties.
I see. I see. Wow.
Yeah, that's
And
common
still,
in Texas nowadays.
I see. Interesting. Interesting. And I want to highlight your book, the recently one that you released, James.
Oh, cool.
Passive Investor's Guide to Commercial Real Estate. And
Okay.
you want to maybe share a few words about that, and I think we can delve into how you structure your deals and
Okay.
the GPLP partnership arrangement. You want to maybe highlight, and you want to go into that?
Sure. So I'm an active investor. I'm a sponsor, right?
Sure.
I only invest one deal passively, and I never even bothered about looking at it. But I'm a sponsor. So, but the thing is, a lot of times I realize there's no materials for passive investors.
Mm-hmm.
And passive investors' thought process is completely different from sponsors, because we are looking at deals, buying deals, turning around. We look for different things. Whereas passive investors, they want to see which sponsor to go, which market to go. How do I select a sponsor? How do I select a deal, right?
Sure.
So there's just no materials for that. So I wrote the book for 95% of real estate investor out there, which is the passive investors, right?
Mm-hmm.
Commercial real estate. And I think I just want to add value to them, because I think it's important right now, because a lot of people have FOMO right now, right? Fear of missing out.
Sure.
And people just throwing in money into any deals that they see in front of them,
True.
listening to whatever the guy in front of them telling them, right? So, but I think giving a book gives them an independent source of verification
Sure.
on how do they should go about and choosing their deals, right? I mean, there's a lot of books on stock investing, right? How to choose a stock.
Correct.
Tons and tons of books, but there's not many books for passive investors to choose what they want to invest. Because if you look at it, passive investors, it's the same like we buying a stock. We got no control, right? When you buy a stock, you've got no control. You just read news, whatever delivered on the stock, and you got no way of seeing what's happening behind them, right? You can just look at certain characteristics. When you buy a stock, you can look at the CEO, we can look at the prospect, we can look at where the product is going to be taken. So same thing as a passive investor. They are like stock investor, but passive investors are the people who buy shares in apartment or commercial real estate, right? What are the things they should look for when they want to invest? So that's why I wrote this book. It's available in Amazon right now. It's in 3 versions: Kindle, Audible, and physical book.
Nice.
We already hit #1 bestseller in US.
Oh, very nice. Very nice. Congratulations.
And US and Canada too. I have investors in Canada too, so I presume people are reading over there. So
very nice.
So,
and I think one of the good things that you described, James, is that a lot of general apartment complex or syndication books are written from a syndicator standpoint.
Correct.
So when I read your book, the whole philosophy or the nucleus of the book is that, hey, I am a passive investor. And as a passive investor, I am looking at deals. So it's almost like, instead of outside in, it's just more like inside out. I like to, kind of term it that, hey, I am, I'm a passive investor. What I should be looking for in a syndicator, what their interests are, what should be the different criteria I should be looking at. So it's very interesting. And speaking about deal structure, James, how do you go about structuring your sort of partnerships? Can you maybe share some details around that?
So the way that I mean, as I mentioned in the book, there's 2 types of deal structure. Some of it is preferred return, more heavy on the fees for sponsors. The other one is more on the equity split, profit split, but less on the fees. Sure. So I like to do more on the profit split. In fact, I only do that. I only do profit split because it's very well suited for value add deals, and it puts both the passive investors and the sponsor on the same boat, right? But there's pro and cons on both structure. Right. And that's what I've written in my book. So I usually do 80-20 split between my investors and myself. We take 20% of any profit that's being generated. It gives us a motivation to really push on the profit that's being generated. But when we sell, we usually give back, we make the investors whole first. That means we give back 100% of the capital back. And on top of that is where we split the profit. So that's how I've been structuring my deals.
Nice. And just on the soft side then, James, I know many investors who they would like to be in a position, I think in a very short time, I should highlight that the amount of success and the wherewithal that you have achieved in such a record, like I think maybe about 4 or 5 years now.
Okay.
It is very inspiring, and I think an example by itself. What would you maybe tell an aspiring investor that who would want to be in, let's say, James' shoes in, let's say, 2 to 3 years? What characteristics do you think that is it like deal sourcing, acquiring knowledge? What do you think separates or those investors that they should be aspiring now?
Well, I think the biggest problem, right? Only very few people want to be successful. I know there's tons of people who want to be successful. There's a lot of wannabes,
Correct.
but actually they really do not want to be, right? So they
Right.
do not want to do the work. So I was in the same boat, right? When I started looking at multifamily, right? I mean, nobody want to entertain me, I said, then I listened to somebody's podcast. He said, if you have to do things that nobody else want to do,
Sure.
right? To be, to come up in life and to really achieve so I said, okay, I'm going to do things that nobody else nobody is willing to do, right? That's
Sure.
why I started my yellow letter marketing.
Mhm.
Marketing, it's a lot of work.
Oh,
I can tell you,
absolutely.
a lot of work. And not many people want to do it. And maybe a lot of people doesn't know how to do it too.
Correct.
But I can't blame them. But they have to go and figure out resources and how do we get started.
It's complete specialized knowledge. I mean, trying to come up with lists, sorting the data, and
correct.
trimming out the records. Trying to in fact, I mean, most of the entities, for example, where these things are owned, they're all hidden. You almost have to go to that second level or third level where you're going and trying to find out that, hey, who owns this? Who's the true owner? And going behind and trying to do sort of an investigative skip tracing work, as they call it.
It's a lot of work, I can tell you that. And as I said, the problem with a lot of people who want to be in my shoe is because they do not want to be in the shoe. I mean, they want to be, but they're not really want to be.
Sure. I understand. I mean,
you really need to be. I must be successful. I need to wake up at 4:00 in the morning.
Absolutely.
And I can tell you, they say, anybody have done it? I don't think so. And I was working full-time job when I started all this. Right?
Oh, that's true. That's very true.
So I had like 340 units while working W2 job. And how did I do it? Right? It's not easy. Right?
Oh yeah, it's not easy.
So I used to wake up.
Tell me how I know.
So we wake up like 4:30. I wake up in the 4:30 in the morning, and I really, really work hard. I mean, of course, we do the normal morning rituals and all that, right?
Sure.
Meditation but the thing is, the willingness to wake up that morning and tune your mindset, and after that, working on your business before going to work. It's a lot of work, right? And coming back at night, and you have to focus. And sometimes on the weekends, we really, really work hard to do things that other people don't want to do, like looking for sellers, learning, listening to podcasts, learning from books, and as I said, I mean, a lot of people want to do it, but really not many people want to do it. I mean, for example, let me give you an example. I have my webinars on how to analyze multifamily markets on my website, right? I mean, that's the highest view. A lot of people look at it. And on that webinar, I told everybody, I said, if anybody wants 15-year data of your submarket, email me at this email, right? And out of like 500 views in that webinar, there was only 2 guys until now who have asked me that question.
Wow.
Right?
I think, I mean, I always like to say this, James, is that now is a phenomenal time to be a student, whether it is podcasts or YouTube or books. I mean, a lot of great books. In fact, on Amazon, you can find it used for like $2 or $3. I mean, it really is amazing, the amount of knowledge that's available. And I mean, as you said, the specialized reports, there's all kinds of knowledge. I mean, I always like to say that, just be a student, have a student mindset. If you are a learner, there's sky's the limit. And in my podcast and on all our banners and stuff, like we always highlight like learn, grow, and serve. That's kind of you always are learning, growing yourself, and you just have that service with mentality, or service with integrity, I like to call it.
Correct.
That's a great point.
So end of the day, when I said whether they want to do it, it comes to their mindset, right? So as I said, a lot of them really do not want. It's a Pareto principle, right? I mean,
Right.
I have contractors where I said I want to do a monument sign, and I call 3 contractors, none of them show up.
Right.
This is a monument sign, right? It's like what, $20,000 business, and
Right.
everybody says coming, nobody will come, right? Because so I realized that there's very few people who will really do something that that they really want to achieve in life. That's
Oh, absolutely.
most of them don't want to do things, right? I mean, even though they want to be, they want the easy way.
Yep.
Right?
There's no shortcuts, that's for
There's
sure.
no
I mean,
shortcuts unless your parents are super rich and give you the money.
it's interesting you say that, James, because I also wore the sort of the W-2 hat for decades, and
Uh-huh.
had my real estate portfolio on the side.
Uh-huh.
I would always invariably go to Home Depot to look at something or do some shopping, because in the evening I would have some meeting or some type of answer that I have to do, or some problem to solve, whether that's whether it's paint, tiles, or whatever. You're always busy, like focused on your goal. So I hear you where you say that, hey, you just have to focus and be dedicated towards really doing the right thing, and not just talk about it.
Correct.
So,
I mean, as I said, I mean, a lot of people who work with me as well, they know I've been, we are making a lot more money doing our own business, but they don't come and ask you, how do you do it, right? So, for example, I did lay out like my text blasting strategy in one of the top podcasts. I'm sure that podcast is being watched like 40,000 people, 30,000 people until now, right? But the amount of people who followed up with me on that podcast to ask me, hey, next level detail, hey, how do you do this?
Correct.
It's like maybe 3 people. Out of 30,000, I laid out what is the secret to reach sellers through that podcast. And that's one of the top podcasts, right? In the nation. And as I said, out of that 30, 40,000 views, I'm sure there's like at least 10,000 wannabes there.
No,
right? Maybe 20,000.
And the interesting thing is that there are services out there. That was actually one of my questions here as well, to be honest with you, is that what other like contracting services or VAs or anything like that you use to outsource some of this marketing stuff. So I don't know, you want to go into that detail, James?
Yeah, sure, we'll go to it, no problem. But I'm telling you, the amount of people who really want to do it, who's like move their butt.
It's a very subset. You're absolutely
find out, hey, what is the next level? Hey, James, he has offered all this advice and he gave his contact number.
Absolutely.
But there's very, very few people who came to me and sent me a mail. James, tell me exactly how to do this.
I know.
And I will tell them. If they ask me, I will tell them.
In fact, James, I like to say this always, right? That your success to your financial freedom is less than $300 to $500 away. And what I mean by that is you can pick the best books, you can get the best analyzers or the best courses out there, and you wouldn't be spending as far as, So less than, for example, for a less than $1,000, you can get top amounts of knowledge. And the key is action, doing it.
Exactly.
Doing it the right way, pounding payments, whether it's making phone calls, going, analyzing deals, looking at spreadsheets, making sense of the numbers. And as you said earlier that, hey, you know what? This $400,000 insurance is a sure anomaly, and it needs that expert eye and experience to spot those anomalies. And it only comes by experience and doing it. So anyways, getting back to that text blasting, you want to share some underlying, details as to how you go about it?
Sure. I mean, so we basically use, of course, we use sources like, what is this called? Listsource.com to look for people. Listsource is where all the title companies put their data in terms of real estate ownership.
So it's a public data, correct?
Yeah, it's public data. So you can pay money. It's like one name is like 13 cents or what, you just take it. And you have to use skip tracing software like TLO or LexisNexis, or nowadays I think there's a few other skip tracing software, and look for, mobile phone numbers or house numbers and all that, and start texting them. And it's a lot of work, right? Because now
you have to go to like almost third level, fourth level to really
correct. So, and once you get that, you have to follow up. You have to put into a CRM. My CRM was an Excel spreadsheet because at that time I didn't want to spend too much money into CRM.
Sure.
And they all start sending mails out, right? So yellow letter marketing to them too, to see whether they can be approached by different places or not, by different ways or not, right? So these are the few things that I did to find my first few deals. Even my single family houses, I found really good deals when you go direct to them. And some of the guys who are really, really good at what I described to you is wholesalers.
Oh yeah,
Right.
absolutely. Their whole operation runs like that.
Yeah, the whole operation runs on getting motivated sellers, and people
Correct.
who buy from wholesalers are the people who do not want to do the wholesalers job. Right? So they're basically taking advantage. The wholesalers are patching in that gap, right? That 10 to 15,000 they're making is actually because they are doing the marketing and they have that skills, right?
Nice.
So I learned a lot from learning on podcasts like Bigger Pockets podcast on how wholesalers does thing, and I said, why not I try that, right? I mean, that's
Correct.
something that nobody want to do,
Why
right?
not
So
adapt that strategy to apartments,
yeah,
So
yeah. So we that's how we're able to find direct sellers, and you'll be surprised on. I use my kids also to follow all the yellow letter marketing. So I have to look for that pictures.
make them more.
Yeah, I say, hey, this is how we make money. That's everybody four letters. So they'll be
I
sitting
know.
in around. I have like 3 kids.
Hey, you have to know the value of work,
Yeah, exactly.
Absolutely.
And they used to, fold letters and we put in, and during one weekend we do that. We were doing a lot of it when we were doing single family, but that's all
Nice.
part of the strategy and learning.
Right. So James, just share with our audience, like,
Mhm.
what is the best advice you would have received, whether it was your mentors or whether it was your parents or friends, like what sort of game-changing moments you had in your journey? Like what were those sort of aha moments you have had so far?
I mean, it's all about self-revelation, right? I mean, at the end of the day, real estate is just a tool, right?
Sure.
I mean, there was one aha moment when one in single family, when we were like doing this, when we were doing single family, um, we were rehabbing that unit, and, the contractor had a few workers with that, working with him. And we went and I saw this one old man, with a broom on his hand, and he was sweeping, and that was a big aha moment, because I realized, because of me, this person is getting a job.
Mm-hmm.
Right. And it was, I mean, I do not know how big was the impact, but it was a big impact for me. I said, wow, I can make an impact in other people's life. Right. I
Absolutely.
mean, I'm giving a
Yep.
job to someone, and I'm
Mm-hmm.
giving a home to someone. So, it's the mission is to help others. Right? How do you make impact in life? So
Yeah.
I have a graph that I show how much people are being impacted. I mean, I'm looking more into the donation side of it and all that. But the
Mm-hmm.
thing is, I realized that how much impact you yourself can make. I mean, if I'm working on a W-2 job, I mean, I'm an engineer, and I'm probably making impact, but my impact is so small, right?
Mm-hmm.
But
Absolutely.
now my impact is huge, because now
Mm-hmm.
I'm impacting directly on
Mm-hmm.
somebody's life,
I know.
right?
I know.
So,
And in fact, similar stories on our side as well, James, that I think in our property management company, we probably have any time over the years of, I
mhm,
guess, 18 to 20 years now,
mhm,
we have had, I think, internal staff versus, and also some, maintenance staff. We probably had a consistent payroll of about
mm,
7 people. And
mm,
as you said, like, people come in all forms, and along the way, it's great to see that some of them actually live within our buildings.
mhm,
I have personally helped folks get on their feet in terms of whether it's getting a truck or a vehicle, getting a
mhm,
van or
mhm,
expensive tools, and getting their jobs going.
mm,
So as you said, I think adding value and making that positive change in the lives of people and your neighborhood, I think
mhm.
that I mean, very well said. I
Yeah, I think it's important, because
agree with you more.
I didn't come from a rich parent, right? So
Sure,
it's hard for me to go and buy a Ferrari, because I always think that rather than buying that, I'd rather give the money to someone who can use it, right?
sure, absolutely.
So when we are able to make that kind of impact, it's a big fulfilling, right? It's a
Right.
self-fulfillment, right? So I think if we approach this whole game of real estate as you're helping people,
Mm-hmm.
you'll get, you may not be the richest guy or the biggest guy with the number of units, but you'll get
Correct.
the self fulfillment.
Correct. I think the satisfaction and the fulfillment that you will have, you cannot, kind of put a
Yeah,
price
you
to
can
it.
put it into price, right?
Absolutely. And I think
So,
it ties back to your earlier point, which I think I want to highlight, is that
uh-huh.
the tenant experience and the listening eye that you bring with your property management,
Mhm.
I think that goes a long way. When a resident in your building says that, hey, you know what? I have a property manager who's listening to my
Mhm.
needs. I think it suddenly changes their mindset. And I'm pretty sure that attributes to increased retention in your buildings
Mhm.
as well.
Yeah.
That people trust the property managers. They trust that, hey, I have someone I can speak to and relate my concerns if need be, you know?
Correct. Correct. Yeah, as I said, there's a lot of value in just making good management. That's it. You don't
I
have
know.
to. You don't have to build a palace and give them. But if you're not managing their work orders, if you're not listening to them,
Right, right.
I mean, rent price is not the topmost.
Objective.
Yeah, objective of any tenants. They can definitely pay $20, $30 more because
Sure,
it's
sure.
hard to find good place to live with
I know.
when people
So
are doing a
I
good property.
appreciate it, James. And just a couple of last questions. I think
Sure.
knowing the scale you are at, James, now, I
Mm-hmm.
think you probably have a big staff around you. Many things are always grabbing your attention.
Uh-huh.
Uh, what challenges do you face currently at the level that you are now? Like, how do you kind of go about your timing? How do you sort of try to manage your schedule? Like, what are your challenges day to day right now?
I mean, our challenges right now is the challenges of a small company trying to grow big, right? We are so used to being hands-on.
Sure. Mhm.
We want to be hands-on, but the thing is, we have to put another layer under us to start managing, right? So,
Sure. Mhm.
so it's hard to find people who can meet our expectations. But I think recently we have been very successful in getting some corporate staff in and able to really help us with things. So, it's a problem where in terms of growth, right? So,
Sure. Mhm.
but I think we are managing it, right? So because we have our own A to Z operation, we also do property management, so we can't be keep on buying, overlapping, like today we buy, next week we buy. We can't do that with like some people.
Absolutely.
So
I
we
think
have to
in a
buy.
lot of respect, James, I think your sort of your infrastructure is similar to us, that from acquiring to,
Uh-huh.
looking through construction, management,
Good, good.
upkeep of the properties. It's exactly like, how we are built around here.
Good, good. So we like to buy and then we like to stabilize things before buying another one, right?
Right,
Because it
right.
needs our attention. So we are going slower than usual, but some people may think it's not slow, but yeah, that's the problem we have. Who do we bring on as our staff at a corporate level that can help us
Right.
and
Mhm.
help us scale, right? At the same time, market is at peak, so there's not many deals out there. So we're not really rushing. So we are
Right,
focusing
right,
a lot on
right, right.
operational
Well,
efficiency
it's
nowadays.
always that slow and steady, and being careful wins wins your race for sure.
Yeah, correct. Absolutely, absolutely.
Good, good. Thank you, James. Appreciate all your words today. And please share with our listeners how they can reach you and any upcoming projects they are looking forward to, maybe.
Yeah, my website is Achieve Investment Group. Like Achieve is like achieving a goal.
Sure.
My email is James at Achieve Investment Group. You can definitely get my book on Amazon. There is a free audiobook link in the Kindle version. I mean, the audiobook link is basically achieveinvestmentgroup.com/free audiobook. If you come and you can get it, the free audiobook over there.
Very nice.
And yeah, I mean, just go and buy. I mean, the physical version is like $12 or $13. I can't remember.
Yeah,
And
it's really
Kindle is $3.99, and I see people investing 50,000, 100,000, or even they're putting in 3,000, 20,000, to be part of a club. And I'm surprised that people don't want to read a book that's written for them.
true. Absolutely. I think investing in knowledge is like the best thing ever someone can do, and kind of
Yeah,
do it. So great
correct,
advice,
correct.
James. Appreciate your time today, and thank you
Okay,
for
thanks for having me
your
here.
time today.
Thanks for listening to Premium Cashflow Real Estate Investing Podcast. Please join us at premiumcashflow.com to sign up for weekly updates, research articles, and more. We will see you again for another great interview with an expert guest.